Hey, it's Nathan with OptionsForAll.com. In this video, I'm going over a case study of where I've messed up significantly by rolling positions out and down. I was rolling cash secure puts out and down. It went bad for me, and I just wanted to go over that and hopefully help anybody else that might make a similar mistake and not do anything stupid like I have done. So yeah, I'm putting it out there so you can see and hopefully learn from my mistakes. All right, so come on down here, and I have a open position right now, but I have two that I've been assigned, and we'll go over them in just a second here. So I have a cash secured put on IBIT, and you can see that the current price of IBIT is $38.42. If we scroll over, we can see that my current position is currently, negative $8,000, and you can see that I've rolled it, and my entire roll chain is negative $12,639.18. I've rolled it 4 times. We're going to click into it, and I'll walk you through like what rolling to death looks like and why rolling might not be the best course of action all the time. Yeah, this real life example. All right, so this is my position right here. And I'm using live prices. We can see my chain total P&L, is at negative 12,639. We can see how it started. So I started it back in October 17th, 2025. I had 10 contracts right here. I started off by doing basically put credit spreads. In this case, I had a Jade Lizard, but a put credit spread where, I had some downside protection is what I started off with, 10 contracts. And I opened this position for a credit of nearly $700, but then the price of IBIT started going down, and so I rolled out and down. I closed that position basically, 4 days later because it started moving. I closed it for a debit. You can see that I realized negative $2,112 on that particular position, but I rolled for a credit, so I rolled for $3,369. And you can see that I rolled from 62.50 to 59, so I rolled out and down the same 10 contracts. I wound up closing that position basically a month later. I closed it for $3,242, but my net position was $126.34, so I actually closed that one semi-profitable, but I still rolled it out and down. I was trying to buy some more time, so I rolled it down from $59 to $56. You can see $56. Expiration December 31st. And so there's my initial opening position, and you can see that this one, it went bad quickly, and I wound up realizing a loss of $3,197 right there. And then I rolled it out, so it's still $56 strike, $56 strike. Rolled it out. I wound up realizing $635, but it wasn't enough, so I rolled it out and down a little bit more. And right now I'm sitting at unrealized of $8,091 on this particular position that expires in May. $54 strike price. Again, the current price of IBIT is like $38.42. So I got a ways to go in order for it to make money. Yeah. My intrinsic value is $15.58. Extrinsic is 15 cents. And so I might have went into too much detail right there. The point is that every time that you roll, you have to roll for larger and larger credits for the most part. You can see, I had to make up $2,112. So I had to roll for a larger credit than, I started at $700. Then I had to roll for a larger credit, $3,369 right there. I had to roll for another credit, $3,623, and then I had to roll for like a huge credit right here to make up this loss right here, so another large credit. So I'm basically just compounding the credit that I'm having to roll for because I need to make up for these losses. And instead of just realizing the losses like I should have done, I just kept going and digging myself deeper and deeper into a hole. You can see, I dug pretty deep. Again, on this roll chain, I'm down $12,639.18. And so let me go to where I was assigned as well. I'm going to come over to my analysis tab and my assign exercise positions. And right in here. All right, so you can see I was assigned these two positions at a $53 strike and a $58 strike on February, 1,800 shares between the two of them. My roll chain, so when I was assigned, I got to keep my credit, but I also had to buy, 1,000 shares of IBIT at $53, and it's $38. and I had to buy 800 shares of IBIT at $58, even though it's $38. So, $20 loss per share, basically, right there. So it's been significant. And so while my roll chains were technically, profitable, I was assigned the stock, which I then turned around and sold, because another thing is that they were not true cash secured puts. Like, I did not have cash set aside in order to buy the stock. So that would be another recommendation. Now, I am not a financial advisor. This is just my recommendations to myself, is when doing cash secured puts, it's because you are willing to buy the stock. And we've all heard that before. You do a cash secured put because you're willing to buy the stock at that price. You want that stock anyway, and so on. For these particular positions that I had, I was doing that on margin. I did not actually have the cash set aside in order to, buy these stocks and hold on to them, for years. I don't have years for them to rebound because I bought the shares while on margins. And so I turned around and I sold them, and you can see my true combined is basically, negative $26,000 loss on those two trades right there. Not to mention that I have the currently open one. That's probably going to be another loss of, $13,000 as well. So roughly $39,000, $40,000 loss, mistake, mess up by rolling on a volatile asset without any plan for exiting, without having any sort of downside protection or anything like that. So a lot of lessons learned, downside protection. When you're rolling for a credit and you're trying to make up distance, like that compounds. Meaning that you have to roll further out, or you can't roll as far down as you need to in order to generate a credit to pay back what you need to in order to close out your other position. And then finally, not having the actual cash set aside and only having margin set aside to buy the shares. So I didn't want to buy them and hold them for years in order for them to recover because they're on margin. So there's those three lessons basically right there. Need downside protection, especially for highly volatile assets like IBIT or Bitcoin. Do not roll for larger and larger credits. They just compound, especially if something's dropping. Cut your losses and move on. Open up a new fresh position and start fresh. Do not chase it down. And then again, when you're doing cash secured puts, have the cash. Be ready to actually buy the asset and hold on to the asset so it bounces. Employ the wheel strategy. So you buy the stock and then you start selling covered calls against it. Don't only have margin set aside in order to buy the stock. So those are basically the key lessons that I've been learning these last couple weeks, and hopefully I explained it semi well, and you could see like illustrative, like how the problem compounds. So here's just another chain, just real quick, so you can see. I realized negative $139 loss, so not bad. I could have cut my losses right there, but then I rolled it, and I had to take on a larger credit, and then I realized another loss. And then I had to roll for another larger credit. So I went from, a credit of, $1,000 to a credit of $1,600 to a credit of $5,335. And I had to realize a loss there. So then I had to roll for an even larger credit to make up for these three losses right here. And it was basically, just rolled to my death right there. And then eventually I got early assigned and I had to buy the shares. And then I sold them for a loss. And so that's it. Hopefully somebody somewhere finds this semi-helpful, and I hope you have a good one.